What's up, guys? John here. Black Monday 2.0 begins in 32 hours. The original Black Monday was October 19th, 1987, where economic growth slowed for 3 quarters and inflation was rising, and it ensued massive panic, ripping $1.71 trillion out of the market. The Dow was at that time about 2,600, and then it dropped overnight into the 1,700 range. So when you see what is happening on Monday, it will all make sense why all the billionaires are selling. You know, Jeff Bezos, the Walton family, Leon Black, Jamie Dimon, CEO of JP Morgan Chase. They ripped out $11 billion just this month from the stock market. Not to mention Warren Buffett sold out $28 billion worth of stock through Berkshire Hathaway several months ago. So when you start to look at everything that's unfolding and these 3 new laws that all take place on Monday, it will all make a lot of sense. In this video, I'm going to break it down. I'm going to show you word for word what these laws are, why unemployment is about to skyrocket, inflation is going to get a lot worse, and banking as a whole is going to go through a massive, massive change beginning Monday. Please hit the like button, YouTube will share this content to educate the people about what's going on in the U.S. economy. And if you'd like to fix your credit to position yourself for what I believe is going to be the greatest wealth transfer in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. Take a look at this. So this is unbelievable. The labor market, they revised their job numbers. So they put out these really, beefed up job numbers, and then they revised it. The Labor Department made significant reductions in the previously reported outsized payroll gains in December and January, matching this slowed economic growth. Then they go on to say that these numbers were then reduced. They cut 124,000 pay gains from the 353,000 jobs initially reported in January. The revised total was just 229,000. It also cut 43,000 total non-farm payroll unemployment for December, revising down the total jobs to 290,000 from 333,000. And so what happened was the same thing is unfolding in the job market. Same thing is unfolding with CPI. Inflation is continuing to rise. So inflation is going up, the job market's going through a change. Now let's look at what these laws are going to look like and why this is going to have a massive, massive impact on overall employment in this country. So beginning Monday, which this will hit 50% of all Americans, 50% of all Americans, even if they earn $100,000 a year, side hustles will become illegal. They will become illegal. Sounds crazy, because it is. I mean, this is going to impact so many people. I mean, even Bloomberg Law, which I'll pull it down here, you can see the URL right here. This new Biden rule does the opposite, jeopardizing 27 million workers' ability to make their own hours and make a living without being pressured into joining a union. Now, this figure, which accounts for basically half, they're baking in that 50% of everyone with a side hustle will be losing their jobs. And why is that? Is it really just going to happen overnight? Well, the IRS, they want to collect, and they don't want all these people having these side hustles where they can't have the microscope on all of them. And so they are going after everybody with a side hustle. IRS reminds gig workers, which become reported in 2020, which must be reported on 2022 taxes. Then Americans failed to pay a record $688 billion in taxes. IRS says that will change. Then side hustles are a legit job. The IRS is watching the gig economy. The IRS, Biden administration, they want to go after every single side hustle. It's not an opinion. This is literally what they're saying. They're hiring 30,000 employees over the next 2 years. And they're investing $80 billion in this. And there's no stopping this. There's no stopping this train. It starts Monday. They say some Republicans are going after, this, and they're going to try to fight it. Look, at the end of the day, it starts Monday. That's what's happening. It's beginning Monday. IRS, Biden, they want to make sure that everybody is W-2. Everybody is going to be taxed, and everything is going to be clear right from the gate. And this is what's happening. I mean, look at this. When you take into consideration what this will mean, even if Bloomberg Law is correct, and they're saying 27 million people will be pushed out of work, if you look at what this would actually mean, presently, according to NASDAQ, survey revealed 36% of Americans have absolutely no savings at all. And another 19% have less than $1,000. Less than $1,000. So you look at this number, 55% of Americans have less than $1,000 in the bank. right? And so when you take tens of millions of side hustles out of the equation, what will that do to, let's just say, auto loans? Auto loan delinquency rates at a 13-year high as monthly car payments get bigger. What will that do to credit cards? Average credit card balances jump 10% to a record $6,360, and more consumers fall behind on payments. Credit card delinquencies surge in 2023, indicating financial stress. New York Fed. You'll see what this is going to, what is this going to mean? It's going to mean these defaults all across. Look, delinquency rates. I would say average is probably somewhere 18 to 20% to be conservative. If you're, near Texas, Oklahoma, Arkansas, Louisiana, Mississippi, Alabama, Georgia, obviously it's a lot more. But, somewhere between that 18 to 20% range is the present default rate on credit cards. So you start to remove this equation, what you're going to start to see is private equity start to move in, and they're going to start partnering up with these credit card companies. They're going to start buying off this debt, and they're going to be going after American consumers. It might sound far-fetched, but Barclays just offloaded a lot of debt to Blackstone just a couple weeks ago, right? Over $1 billion, $1.1 billion worth of debt to private equity firms. So a private equity firm. So you start to look at this equation, it's very, very obvious what happens next. Presently, 40% of the approximately 22 million borrowers who had student loans did not make their payments in November, right? We're going to see these defaults continue to skyrocket, and they're being incentivized to skyrocket. Look, for example, what just happened with credit card defaults. U.S. caps credit card late fee charges in the new Biden crackdown, and this will bring the penalties to $8. So this is going to reduce late fees on credit cards for between, depending on your credit card, between $32, which was the original, $32, $35, some even $40, to $8. So people are going to look at, that minimum payment and say, look, you know what, this minimum payment's $200 a month, $300 a month. I'm not going to pay it. I'll pay the $8. It's not a big deal. It's $8. Paying $40 on a $200 minimum payment, that's a big deal. But when you see what the consequences of this is going to look like, what you're going to begin to see is that millions of Americans are going to destroy their credit. So one late payment can sit on, can have a negative impact of 180 points on one's credit report. One late payment, 180 points. And it will stay on their report for 7 years. For 7 years. So here's how this whole thing is going to play out. So as this gig worker rule takes place Monday in 32 hours, the same exact time, the BTFP program, the Bank Term Funding Program, pulls out the same exact day, which is the lifeblood of regional banks right now. And you have Jerome Powell, Janet Yellen, the IMF, you have every major player warning of massive bank failures incoming. So what's going to happen? If they start seeing banks go down and people start defaulting on bills more and more and more, they're going to pull back immensely on credit. That's what's going to happen. It's obvious. And so the Fed banking bailout to end, New York Community Bank roller coaster of the day comes this week before the Fed reserved banking bailout program set to expire Monday, March 11th. The Bank Term Funding Program, which was launched in March of 2023 following several high-profile bank failures, its aim was to make additional funding available to eligible depository institutions to help assure banks that they have the ability to meet the needs of their depositors. Since it launched, the U.S. Central Bank has dished out $164 billion to struggling banks, according to St. Louis Fed. Additionally, Bitcoin surging 40% in March 2023 when the BTFP was launched amid the U.S. banking crisis and the aftermath of Signature Bank and Silicon Valley Bank collapses. On March 7th, angel investor and author commented on the banking calamity, comparing the financial crisis to 2008. It's just like 2008, where everyone was told the mortgage-backed securities were AAA, except this time, the new toxic waste is treasuries themselves. So you see all of these things unfolding at the same time. At the same exact time. And then you wonder, they say it's not a big deal. Jamie Dimon's liquidating, Zuckerberg selling $500 million in stock. All the major players are unloading stock. All the major players are unloading stock. Right around the same time this is all set to happen. New troubles for New York Community Bank Corp. And America's top regional banks feel right around the corner as the Federal Reserve is getting ready to shut the emergency lending window it opened nearly a year ago. The Fed launched the Bank Term Funding Program after the collapse of Silicon Valley Bank and other institutions in mid-March. The rescue program, aimed at calming depositors and investors, let banks and other financial institutions take out up to a year-long loan from the Fed using beaten-down bond values as collateral. The Fed's willingness to accept these bonds at par or face value made BTFP an attractive source of liquidity. All that is coming to an end Monday, right? So you see that happening. Same time, commercial real estate is in really, really big trouble. And Powell is saying that it's going to be manageable, but banks are going to close. Right? He said that February 5th. Then he says this yesterday. Powell warns commercial real estate woes will lead to bank failures. This is a problem that we'll be working on for years. So he changed his tone pretty dramatically in the course of, call it 30 days, February 5th to basically March 8th. Right? So in the course of 30 days, there will be bank failures, Fed tells lawmakers. Federal Reserve Chairman Jerome Powell said he expects some U.S. banks to fall in the coming months due to struggles in commercial real estate. 16 hours ago, Housing Wire, right? So you see all these things. IMF warns of new banking crisis a year after Silicon Valley Bank collapse 3 days ago. IMF says weak tail of banks could struggle in economic downturn, October. You see this, then you see, Bitcoin going crazy, up 45% in the past month. You see gold hitting, record highs. You start to see everything. It makes sense. People don't trust the system. People think that everything is in really, really, really bad shape. And it does make sense. When you look at what's going on with record high inflation, record high consumer debt, and then you see these policies being enacted to rip millions of jobs out of the economy and really hit bank lending. Without these, relaxed lending policies, the economy is toast. Small businesses depend on credit. And the BTFP program is the lifeblood of small businesses, especially the last year. So you see all the money getting pulled out and then the labor market being under attack. You have to ask yourself, how does this whole thing not start Monday, 32 hours? I'm not saying it's going to happen that exact day, but I'm saying it's starting that day. It's going to start that day, and it's going to get worse and worse and worse by the day. And sometime very, very, very soon, I would bet probably sometime in the second or third quarter of this year, we're going to start seeing things really, really, really hit the fan. Drop below. Let's have a conversation about this. Love to hear your opinion on it. And if you'd like to fix your credit to position yourself for funding, if you have any intention of getting a bank loan, a real estate loan to invest in property, an auto loan, maybe to buy a work truck, or maybe buy a business, if you have a goal to get funding and financing to move forward when the entire world is going to get shocked due to what's happening, make sure you have a credit score in line with your goals. So if you were walking into a bank, you would know that that bank is going to want to do business with you because you're viewed as low risk. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any issue at all on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for Monday. See you next video.